Welcome to another episode of the Financial Armor Show. My name is Brad Cooper, the president of Cooper Financial Investments. And I want to welcome, as always, my amazing, awesome co-host, Tony Shore. How you doing today, Tony?
I am great, Brad. Great to be here with you. I've had
Wonderful.
a great week. I had a busy weekend, in fact. Went down and saw my parents. Then
Great.
That's about 4 hours away. Drove back, got my wife, and the next day on Sunday, we went down and moved my youngest daughter back home from college.
Oh, great.
So, yeah, she has finals this week, but we got our stuff out this weekend. So, and then my wife and I, the funny story, we have a beautiful upright piano that the kids took lessons on. And of course, the kids are moved on. We want the space in our living room. So for the last 5 years, Brad, I've been trying to get rid of this piano, right? And it's a Kincaid upright, probably from the late 80s era it was made. But it sounds beautiful, and plays great. Heavy, but doesn't take up a lot of space. It's fairly compact upright, but it is very heavy. Tried to sell it on all the different sites, and no bites, or a few. Then put it for free. Had tons of people say they're interested or they wanted it, but never showed up. Right.
So what you're telling me, Tony, is you want to give this wonderful gift as a giveaway to one of our lucky listeners, right?
Well, no, the story goes though, this morning, people came over over the weekend, yesterday, and looked at it and played it and loved it. And said they wanted it, and they came this morning and picked it up, but I had to help them move it out of our house. I mean, they picked it up, but that was the thing. We gave it away, but nobody wanted to have to move it
because they're so heavy.
Yeah. And I told, basically people said, well, would you move it for us? And I'm like, absolutely not. And then I got all these calls. Hey, I'll pick up and take away your piano if you pay me $200.
Like, you're kidding.
No. And I'm like, no, we're giving away a beautiful piano. We're not going to pay you to take it. So, but this young lady and her husband are both piano teachers, and they love the piano. But they're small people. It's not like they brought like 3 of their friends, all small people. So I had to get on the end of this thing and do the heavy lifting. I hope they got it unloaded. I told them they're going to need more help, and I explained how they should handle it. But we finally get rid of our piano, so my wife's excited. But it took 6 years.
I believe it. We bought one many years ago, right when we first got married, and loved it. And same issue, Tony, getting rid of it. No, everyone wanted it, but they did not want to come and get it and load it.
Right. Plus, once you move it, you should probably have it tuned. I mean, there are expenses, but for a free piano, and this one was beautiful. It was given to us. And I remember having to help move it in. But our kids got a lot of use out of it. My wife played it a little bit, or just not using it. Anyway, I'm sure some of our listeners can relate. I tell you, as you get older and the kids move out of the house, we're almost empty nesters. We're starting to think of downsizing and things like that. And we wanted to move the piano, but I'll tell you what, took 6 years, but it's out. And so I'm excited about that. That's probably the most exciting thing happening in my life.
So that's the most important thing. Your daughter coming back is secondary.
Oh, well, yeah. Well, we've known that would happen. That's a given.
But that's a good thing.
That hasn't taken 6 years. So
exactly.
Yeah.
Hopefully she won't stick around for 6 years.
Yeah, that would be another problem. You'll see another ad in the Facebook marketplace if that happens. So,
hey, for this lucky man, come, I will give you my daughter.
Yeah. Yes, exactly. So, Brad, how about you? How have you been?
Oh, it was great. We went to Missouri, my home state, hometown, for the weekend. One of my best friends.
The Show Me State? Is that the
Show Me State? Yes. Show me the money. Jerry Maguire, right?
Yes.
But no, my best friend's daughter just got married, and what a beautiful wedding. Richard Black, which you'll hear him in the future. He's been a CPA for decades and one of the best tax experts that I
Wow.
know that does a lot of tax planning for our clients. But
Oh,
wonderful
excellent.
visit. I visited my wonderful mother and father-in-law and brother. So it was a great visit, quick, but great.
Yeah. Good. And I know you've been busy there, meeting with
Yes,
clients and talking to our listeners that call in. So
right.
the financial planning and on today's show, I love our topic for today, Brad, the Silver Tsunami. So
Yes.
tell us a little bit about that.
You know, when I first read the article, preparing for our radio show, and came across the Silver Tsunami, I started laughing because back when my daughters were in high school, and we'd be riding around Arizona, and they would always say, "Dad, why is it that all the gray-haired people own the nicest sports cars?"
Exactly. It's true. My wife asked that. It's like every time we see a really fancy or old sports car, a
Yes,
really cool car, it's an old person driving it. And
it is.
I'm like, well, that's when you have time to spend money on your hobbies or build fix up that car or get a
That's
nice
right.
sports car. Yeah.
And then now I'm laughing. If you're watching this on YouTube, you'll see I have some nice gray hair, coming in on my face, my sideburns. So, hey, I'm almost there. But the Silver Tsunami. So, what we're going to talk about, which we've talked about this topic in previous shows, but hit on some different areas, Medicare and Social Security, because that's
Sure.
one of the things that it seems like it's changing on an annual basis. And we have some of the best strategic partners if you need help with Medicare. We have a Social Security team that is one of the best if you need help with Social Security planning. And we're going to cover just a lot of maybe common facts that you may be aware of, but some you may not, to help you better prepare for retirement, or maybe you're a few years out, just to be more proactive when it comes to
Yeah.
retirement.
Yeah, well, I think the thing that really blows my mind is that statistic that more than 11,000 people every day are turning 65 and becoming retirement age.
Right.
That's an incredible. That's just a mind-blowing statistic. So over 11,000 people a day are basically retiring, or at least turning 65, getting to that retirement age.
Absolutely. And this is going to go on for many more years.
Yeah.
The statistic I've read in past years was $10,000 or 10,000 retirees a day, but now
Yeah.
11,000 baby boomers per day. That's a lot. And
Yeah.
also a lot of planning that if you're not doing, you need to do ASAP, because this could really impact your retirement. And at 65, what happens, Tony? What decisions do you have to make?
You have to figure out your Medicare
That's
and your
right.
health care. And that's one of the costliest things you've said on past shows. In fact, recently we did a show that focused a lot on that. And you said that Medicare was one of the most costly expenses in retirement for people that you have to plan for, right?
Absolutely. And there's a lot of good plans out there, from Part B, Part D, and choosing the right supplement, which we talked about with our Medicare strategic partner. However, if you don't plan correctly, you could be out tens of thousands of dollars over a period of, the next 5, 10, 15 years if you make the mistake and don't do your homework or talk to a Medicare professional that knows Medicare inside and out. Because again, this changes on a regular basis. And I shared this statistic and study here, I think maybe a few months ago, but I want to bring it up again because it's so timely. Fidelity did a study a couple years ago, Tony, and they said if you're turning 65 today, over the next 20 years, age 65 to 85, even with Medicare, having a good Advantage plan or good supplement plan, the average American will be out of pocket cost for healthcare over $260,000.
Wow. Wow.
Unbelievable.
Yeah, out-of-pocket costs. Yeah, because some people think, "Well, I'll have Medicare, and that'll be my health insurance. I won't have to worry about paying for Medicare or health insurance." But there will still be premiums, there'll still be deductibles, there'll still be copays, and
Right.
there will still be plenty of out-of-pocket expenses. I mean, traditional, regular Medicare doesn't cover things like hearing, vision, dental. You can't
No.
Medicare doesn't pay for your hearing aids, it doesn't
Right.
pay for a lot of things, and so that's where I guess the supplemental or advantage plans come in, correct?
Absolutely. JP Morgan did a study basically and said a person who is 65 and covered by original Medicare will spend about $542 a month in cost on average, which that's over $6,000 a year. That's average. It could be much more. And looking at our national healthcare system and the increasing price of healthcare cost, inflation, that's probably going to go up substantially. However, the study continued and said at age 95, that same person will spend over $1,484 a month.
Wow.
So that is just going to eat away at a lot of retirees' retirement funds and nest egg
Yeah,
if you don't plan accordingly
right.
with
And
that.
that's regular Medicare. What about the Medicare Advantage numbers?
The Medicare Advantage, a person turning 65 may spend as much as $427 a month out of pocket expenses. So, a lot of advertisements you see out there, Tony, and here and others. Well, if I have an advantage program or plan, it doesn't cost me any money. Not true.
That's true. Yeah. Yeah, there's still deductibles and, copays, and there'll still be out-of-pocket expenses.
Right. And just as a recap and a reminder, which we talk about often, is when it comes to long term care, nursing homes, skilled care, Medicare does not pay for nursing home care. And I know we've talked about that a lot, but I still get that question every now and then. Brad, you know, I have Medicare, I have a good supplement. Will that take care of my nursing home costs? And unfortunately, not.
Hmm. Wow. Yeah. In long-term care, I know Medicare only, so many days, and that's if you're
Right.
transferred directly from a hospital
Correct.
to long-term care, like recuperative care. It covers up to 90 days of that, but not traditional long-term care. Yeah.
No. So, and that's part of the study that that was done, even with Fidelity's study, they included some of the costs for long-term care, but it still did not include if you have to go into a long-term care facility.
Yeah.
And, the average cost, again, I just read a couple weeks ago, an updated study, over $9,600 per month for the average nursing home
Wow.
cost. So,
Yeah, my mom's just went I just looked at this past weekend when I went to my parents', on Saturday, I looked at the bill for my mom's facility. She has Parkinson's, and she needs 24/7 care, help going to the
wow,
bathroom, help bathing and getting in and out of bed, and, wheeled around, and meals, pills, everything in her medical. But her, bill is 11,000. The overall bill before anything covers anything is $11,000 for her to be there.
11,000.
Yeah.
Wow.
Yeah. Now she's getting some Medicaid help with that,
Right.
and she has some insurance help with that, and then my dad still has to pay
Wow.
a portion.
And
Yeah.
and thank God, Tony, that your parents can come up with, a little bit of money to do so
Right.
because a lot of
And
Americans.
they had a type of insurance. Of course, their insurance that they had only covers 2,000 a month,
No.
which isn't, that's not gonna that's not
No,
gonna cover it, but hey, it's 2,000 a month they don't have to pay. But yeah.
that's right. And I mean, we could talk more and more about that because my father for 4 years was in a nursing home. Thank God for the caretakers, the workers in these nursing homes,
Yes.
because I know there's a shortage there and,
There is, and the basic workers that help them do things like get in and out of bed and go to the bathroom,
right.
the CNAs, the pay is not great, and they have a hard time finding, help, and, fortunately, my mom's facility, They're very, they have a very great staff, and the nursing director there is fantastic. And so we're very fortunate.
Well, that is good. And Tony, this is probably, if not number one, the number two topic that comes up daily in my daily meetings with new people and my clients is long-term care. The
Yeah,
worry
I
about
bet.
that. The top three risk, number one's market risk and all the volatility we're seeing
Sure.
in this major presidential election year. But secondly, future taxation, which we talk a lot about, but
Yep.
long-term care. And just to pause there, if you're listening and saying, oh my gosh, we're not prepared, we can't afford a long-term care policy, too expensive. And I would agree with a lot of people that say that. And some of those plans aren't that great. And a lot of my clients who have had those plans for maybe 20 or 30 years is actually being forced to cancel them or lock in lower benefits because the carriers, the insurance companies, are increasing their premiums every
Yes, they
single year.
are.
And I know that you've seen that too in the
Yeah.
past.
Well, it's funny because a gentleman that has been at the conferences you and I go to once in a while, the financial conferences,
Yes.
he happens to be based in Florida, and he shared a letter that one of his clients got from their long-term care insurance company. They had the old style traditional long-term care where they had been making really high expensive premium payments
Right.
each and every month, and they don't get that money back. It's been going in, and they've been making these high payments. Well, now the insurance company got a low rating, and they said this long-term care insurance, we can't cover it, so we're going to provide you with some options. Here's our choices, and I think there were three choices. The first, they said the standard rates will be going up 189%.
Wow. I believe
They
it. I've seen
they
it
said that, and they said
times differently.
we've submitted that to the insurance board to get approval, right? Yeah,
Wow.
because they have to get approval from the government to be able to. They can't just raise somebody's rates 189%.
Right.
But they said in order to remain solvent and be able to cover, they have to raise the rates that much. And they said, so we're offering you, hey, we'll give you X amount of dollars, and then we'll give you this amount of coverage for this price. And then they had all these different plans. But I mean, my eyes fell out. You would not believe this letter. I mean, I would have thought it was made up, something you'd read on one of these parody,
Right.
your insurance is going up 189%.
Wow.
So you want to make sure you work with somebody like yourself, who there are other strategies to help cover this. And there are really good insurance companies you can work with. You have to have other ways to cover long-term care, don't you?
You do, Tony. And unfortunately, we see this on a weekly basis, at least. But there are solutions.
Yeah,
And, you know, if you have this as a concern and you're saying, what are those solutions? Because I'm finding, Tony, a lot of our industry is not talking enough about, you know, this big risk of long-term care, but also they're not talking about a lot of newer solutions that basically are guaranteed in some cases for approval. If you need it for long-term care, nursing homes, or maybe in-home healthcare and bringing
sure.
a nurse in, it will pay for anywhere from 4 to 5 years on average. But here's the good news, Tony. What if you don't need it? What if you're putting money into a plan and you don't need it, you pass away, then all the money in that plan will go to your beneficiaries.
Yeah.
So, unlike long-term care policies, the majority of them, that is, where you may pay into these plans for 20, 30 years, maybe $100,000 worth of premiums, but you pass away, don't make a claim, you lose all the money.
Hmm. Terrible.
So,
Yeah. So you want a plan in place to deal with that, to deal with Medicare costs and healthcare costs in retirement. And the Silver Tsunami, they're going to need plans in place because things aren't the same as they used to be. It can
right.
get complex. What's next? What else do we want to talk about here
Well,
today?
people turning 65 is part of the silver tsunami. We must
Right.
also prepare for is that thing called Social Security.
Sure.
So if you're approaching retirement, thinking about retirement, and you're turning 65 this year, Tony, your retirement age most likely is going to be 66 years and 10 months. So what does that mean? At full retirement age, FRA, if you ever see that abbreviation, means that you're entitled to collect 100% of your benefit at that age. Now, can you file before? Yes. Can you file after? Yes.
But if you file before, it's going to be much less, right?
Much less. And just, as we go into this topic a little bit, this topic and the planning process is not black and white. And I usually kid about this during a seminar or a speaking engagement, but there's a lot of reality in this where the majority of people go to their neighbor next door, Bob, and say, Bob, when should I file for Social Security? And Bob says, well, you're 62. Take that money now because it may not be around next month or next year.
Right.
So do not take your advice from Bob alone. Okay.
Right.
Work with a financial service professional. Like I said earlier, we have a team of Social Security gurus, I call them experts, in my opinion, that will look at every person's case. And in some cases, it may be in your best interest to file at 62. Some at full retirement age, maybe 68, 69. Our team can run what's called a Social Security maximization report for you. And what you get out of that is knowing all your options, whether you file at 62, 63, 65, it doesn't matter. And what's the most in the best interest for you to maximize that benefit. Because at 62, if you just file and start taking your benefit, there's going to be a 30% reduction than waiting to full retirement age, 66 years and 10 months if you're turning 65 this year.
Yeah. Yeah. And I think that makes perfect sense. And you need to look at when the best time for your situation to file is, though, Brad, because you have this report, the Social Security maximization report, that you can run for people, and you'll look at their own personal situation and say, hey, for you, it might be better to, file early, or, hey, you should probably wait until you're 70 to file. You'll make that much more money, right?
That's right. And there's so many factors that go into this consideration, health. Do you hate your job? Or are you looking at doing tax planning and still having big income amounts in your tax return? I mean, it goes on and on. That's what we will sit down with you and help you determine. And just to give you an example, because I like to use dollars when it comes to, using examples instead of just percentages. So the difference of waiting versus filing early, let's say that amount is $2,000 per month. And that could be the difference between age 62 and 68 or 69.
Right.
So the difference is if you go ahead and file early and not get the right advice, that could be a $600 less benefit you're getting, $1,400 a month versus $2,000. Or if your full benefit at 70 is going to be $4,000, which I just helped a client, their benefits $4,000. If they would have filed at 62 several years ago, that would have been about $1,200 less.
And they'd be locked into that amount.
And no way of changing that, Tony. So because Social Security, when you're looking at all the different options, that's one of the biggest incomes that most Americans will have throughout retirement. It's the biggest percentage is Social Security. Now, you may be fortunate enough to have a pension and investment income, but making this decision is so important, not only for you, but also your spouse as well.
Yeah.
Because if you're married and let's say both of you are receiving Social Security benefits, and let's say one spouse benefits much more than the other, when one spouse dies, one of the Social Security checks goes away. It's the lowest of the two, but that could be a 40, 50, 60% reduction overall in your monthly income budget.
Yeah. Yeah, I mean, that's crazy how much of a difference it can make. And my neighbor, it's funny you mentioned you talk about your neighbor Bob and getting advice from
Right.
him. My neighbor, great friend of mine, quite a bit older than me. He filed for Social Security when he turned 62 because he's like, government isn't hanging on to my money. I can invest it
Right.
better. I'm going to make it work for me. I want that money. Well, he kept working full time and he made good money, right?
Right.
He made good money and he kept working until 72, but he took his
Wow.
Social Security. So he locked in the lowest amount
Oh,
possible.
no.
Then he kept working full time, so they withheld the benefits because you
Yes.
can, if you make over, I mean, some crazy small amount, right? Like 24,000 or
Yes,
something a year.
exactly.
Yeah.
Exactly.
If you make over that, over that, they start taking
Taking it
they
back.
start withholding that money
Mhm.
anyway, and you'll get that money later, or that's the way it's supposed to work, but you've already locked in a lower amount. So then when he did finally stop working and they started paying him,
Right.
he's making the lowest amount and he didn't earn that increase every year. Had he waited until 70, it
Oh my
increases
goodness.
at what, 8 between your full retirement age and 70, it rolls up at 8% a year. That's a pretty
8%.
good return.
That's right, 8% per year, and,
Yeah.
wow, that
Yeah.
is unfortunately but, you hear stories, I hear stories on a daily basis there, so make sure you do your homework, your research, contact a financial service professional like
Yes.
us that can give you that, honest feedback and rely on experts that we have to get the facts for you, so I know
Excellent.
we're
So how can our listeners get a hold of you, Brad?
Yes, Tony, they can reach us directly at 888-390-5277. Again, that's a toll-free number, 888-390-5277, or they can visit our website, financialarmorshow.com. Again, that's financialarmorshow.com. And contact us. We'll sit down with you for a free visit over a cup of coffee, tea, water, and just answer all of your questions and let us, do the hard work for you and provide you the wisdom and knowledge that you need to make the right decision.
Excellent. Well, Brad, great show today. Great topic. And prepare for that silver tsunami. All the folks retiring out there
Right.
need a plan in place. Thank you so much. And listeners, that does it for today's episode of the Financial Armor Show with our host, Brad Cooper.
Thank you, Tony.